Well, good morning or good afternoon, everyone. Thank you for being with us today. Our webinar on how accurate resource planning and utilization can drive profitability in your professional services business. We do appreciate you being here with us, and we're excited about it. So we think we have some good content. I'll introduce myself, and then I'll introduce my partner. I'm Rich Fowler. I'm the partner liaison for the professional services add-on to Business Central Progressus. And with me, we have Jeff Smith. He is one of our Velosio solutions architects, well-versed in not only the legacy Dynamics products, but also new Business Central and Progressus. So he's my professional services expert, and I'm happy to have him along with us. Jeff.
Thanks, Rich, and thanks to everyone on the line.
Well, we only have about 25 minutes, and we're going to try to respect your time. We tried to start on time or as close to on time as we could. We're also going to end on time or as close to on time as we can. However, we've got a lot of content to go through, and we want to make sure that we get it to you. I didn't realize I still had my readers on, so I apologize. Let's kind of move forward. So we're talking about resource planning, utilization. What is utilization and why does it matter? So from the basics, for anybody that's done a college paper, you start with what's the definition of my problem. So the definition of utilization is how busy or how billable your people are in a given time frame. And we're talking specifically about professional services industries. We're talking about businesses where your people and their hours are your inventory. And those are the things that you are selling, and that's what you're getting paid for as you sell those things off to other people. We're also going to introduce a couple of other concepts in here. One of those concepts being machinery and other things that can be classified as resources and how those matter and why we can capture that utilization and better run our professional services organization with that. So Jeff, since you're my expert and you also have CPA background and far deeper accounting background than I do, let's talk about utilization in a professional services industry. The big question is why does it matter? But what impact does utilization have on a ProServe business?
Well, Rich, I think the big thing is that it completely drives profitability. And from that perspective, because it is what you bill for, then clearly the more hours that your team can be utilized, the more revenue that you will drive. And so one of the things that's like really important is that incremental increases in utilization can drive significant increases in profit margin as well. And we'll give an example of that in just a little bit that will kind of illustrate what we're talking about. So I think as we get into what we're going to talk about today, the biggest thing is what we want to make sure that we're getting across to you is that you want to try to work as hard as you can to keep your people organized and to have them scheduled, and therefore you'll drive the best utilization of your organization's staff.
Awesome. So you alluded to it. Let's kind of get right to it. As we talk about utilization, profit, billability, those kinds of things, one of the first, and we started this with kind of a top 5 things that you should do to establish utilization and to maximize your utilization. One of those top 5 is to establish a utilization target for every single resource. And as we talk about resources, we want to be able to account for all that activity. And as I alluded to a second ago, we also want to be able to establish targets and track the resource utilization for those things that might not be traditionally considered resources. And by that, I mean subcontractors and possibly machinery. So let's start with the first bullet point, Jeff, as we talk about accounting for all activity. Why does that matter?
Well, there's a couple things that really come into play with this, Rich. First of all, it is making sure that you're able to coordinate and satisfy the customer. You certainly want to make sure that you have people available for that, and making sure that they're there on time and also able to deliver the services that they need to provide. The idea of machinery and services or subcontractors is really just the same. So you can consider all of those important elements. The other thing is, and I'll use us as a professional organization. You know, we have targets that our our consulting staff is expected to meet. So whether that's 60% or 70% or 75% or 100%, you know, meeting those targets can also then help incent your staff to reach out for more opportunities. So all of it is a positive that drives revenue and makes better customer satisfaction as well.
So we talk about the percentage, and we talk specifically about, I believe you said 70% is the kind of the standard ProServe industry target number.
We see that in a lot of our clients, that's for sure.
Is there one, and this is a question, we've not prepped this one, is there an industry that has either a higher or a lower as a norm, and can we define those? Do we know why?
I don't know if we'd break it down by industry, but I do think that there are different types of professional service organizations that have higher targets than others. And so I think it depends on the nature of the professional service being provided. Some of the things that you got to consider when you're defining what the rate should be is what are the other elements of work that those individuals have to complete. So if you're in an industry where they have to get constant education and updates, like software as an example, then it's important to make sure that you're allocating a proper amount of time for your staff to do that, so that when they are out and they are being billable, that they're able to you know, offer their services at the highest level.
And by the highest level, you mean the highest rate possible?
Well, that and being able to provide good quality service so that the client's satisfied as well. So you're always walking this line of balance between you know, making sure that you're maximizing your profitability, but also then being able to satisfy your clients.
Awesome. Okay. So as we think along that line, the graphic that we have here shows a Gantt chart of basically it's a resource board to show where my resources are, where they might be, you know, as you're looking at systems. And, you know, we're talking about best practices here, but we're also talking about software too a little bit. As you look at that next system, how important is a Gantt chart style feature that you can be able to see where your resources are and see where they're going next and where they've got holes? That was for you.
Oh, I'm sorry. Well, it is important because typically in a professional services organization, we're defining a project plan. And then, you know, that then leads us down a path where we may have different types of resources to perform different portions of a project. And having a Gantt chart is, and then also a more like a dispatcher calendaring type of operation allows you to then make sure that you're planning ahead of time to have the right resources at the right time.
And we'll talk about the integrations and interactions between systems a little later on in the half hour, but we definitely will talk about why it's important to have those systems talk to each other, so you're getting great information. So let's keep going for a second. We talk about demand versus capacity. Can you let's first define what capacity is, and then let's talk about how demand and capacity will be impacted not only on utilization but on how we track those things.
Well, capacity really defines how much availability does each of your resources have, and then how much does your overall team provide as well. So, you know, you may have full-time employees that have a 40-hour week. You could have part-time resources that maybe have a 20-hour week. You may have resources that are available 4 days a week but work 10 hours a day, or you may have resources that work 40 hours a week but work 5 days, so 8 hours a day. And so this allows you, by defining capacity for, and what we call norm time as an example, allows us to then distinguish. And then also, when you're measuring a utilization, you're measuring against their capacity versus against the overall. So utilization on a 20-hour-a-week employee is or 10 hours of 20 hours available is 50% utilized, whereas 20 hours on 40 hours would be 50% utilized as well. So we got to really look at it that way. And then, being able to be able to track the demand for that resource and be able to lay it out based upon that capacity is a really important magic behind it, if that makes sense. And making sure that you can get the right people in the right time, but also working within the constraints of your team.
So one of those concepts so far we've talked about just straight, 20 hours and 40 hours or monthly or something else. But some systems and some folks use systems that have the concept of an hour bank where my capacity might be against a set amount of hours that have been agreed to. Talk to that for a second.
Well, the idea of an hour bank is that you may be working with a client that's going to set aside 20 hours a month or 40 hours a month for you to do work for them versus the more conventional scheduling based upon task and so forth. So it is just a little bit of a different approach to how you're going to work on a project. But we're always going to take those opportunities where we have a guaranteed amount of time set aside for an individual project.
Okay. But the point being, there may be several different ways to handle your specific capacity solution, and make sure you choose a system that will allow you to be flexible and have the flexibility to choose one or the other or a combination of the 3 or 4 options that you have.
That's correct.
Cool. So we've got demand, we've got capacity. So now we have to worry about hours. And the headline there is make every hour count and count every hour. I'm going to start this one because this is something that is near and dear my heart. One of the things that we talk about in almost every conversation we have with prospects and clients is, are you counting the hours accurately? And everybody says, sure, I am. However, no, you're not. And unless you're doing daily time entry with a system that will allow you to easily and effectively capture those hours and those parts of hours, and that's the key. It's the parts of hours that make a difference. Counting every hour is a big deal. So some of the things that we recommend as absolute musts, and I'll tell you, it's a fight. And many of your employees will say, I don't want to do that, it's too hard or whatever. And the answer to that is no, it's not. And it's the expectation is you've got to do daily time entry. There are several studies that have been done. I talk about it almost every time. We have a white paper on the Progressives website that talks about it. It's called the Forgotten 15. And in that Forgotten 15, those studies that were done have proven that capturing time during the course of the day against the project directly to the timesheet can add anywhere from 12 to 18% directly to your bottom line for doing nothing differently other than saying, yes, I'm going to capture my time on a daily basis. And as you think about that, that's easy to talk to because and I'll use a previous company, we used to have our timesheets in by Friday at 3 o'clock, say. And great. So as normal consultants do, nobody thought about their timesheet until Friday at 2:30. And then they went, oh, I need to get my timesheet in. So they block off 2:30 to 4, and knowing that they had an hour leeway, they block off 2:30 to 4, and then they go back to their calendar throughout the week, and they see, okay, well, I had an hour set with this client here, let's bill that. I had an hour set with this client here, we'll bill that. I had a 2-hour block here, that's not billable. Okay, and that's a start. However, what that doesn't take into account is all of those emails or 10-minute conversations or other things that popped up during the day where you had to stop your day as a consultant, take care of this problem for the client, and then come back to your day. We work a lot with accountants and attorneys, and I can promise you, no attorney lets a 10-minute block of time go and build. Most attorneys bill in 6, 12, or 15-minute increments, and if they pick up the phone, you're getting a bill for 6, 12, or 15 minutes. And like a mechanic, they're one of the few that can say, in an 8-hour day, I may be able to bill 16, 18 hours, depending on how I did my day, how efficient I am at the day, and how things go. That's not trying to cheat, and that's not being underhanded. That's saying that we've got a convention that says, we bill for everything we do. And if it's a conversation that requires this resource, that resource is going to bill you a minimum of a quarter hour or whatever the increment might be. If you're only doing your timesheets on Friday at 3, you've forgotten how many of those interactions, 6, 8. If there's 2 a day, you forgot 8. And that's, do the math, that's 4 hours of billing that you could have jumped onto. You could have also, it could be 16. It could be all kinds of things. So time entry being easy and efficient is very, very key. So what you see here is an example of a mobile time entry that can be done directly from the consultant's phone. In this case, it happens to be Business Central, and it pulls in the project, the description, the task code, the work type, all the things that need to be done. And they can simply say yes, and hopefully it's at the client site. If they're on site, they pull out that cell phone, they go bang, I pop it up, boom, 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 knock it in. Maybe the client's sitting beside me and I can say, yes, is this right? Is this what we did? I was here from X to Y. You're gonna check out on this. Great, I'm gonna hit enter. Boom. And now that's in, that's done. There's no question from your side. And more importantly, there's no question from the client contact side because they were there with you when you did it. So time entry on a daily basis and the ease of time entry are two very key pieces. We've also seen we offer a couple, Business Central with Progressus being one, that integrates multiple systems. And I know, Jeff, you use this a lot, and I'm not expecting you to show it, but talk about the integration with things like Outlook and why that makes such a big difference.
Well, one of the things that we're able to do is actually we're able to have things on our calendar, and then right from that calendar event, we can drive a timesheet. And I think the other thing, just to maybe say what you were already saying, Rich, is that you may have been on site for 4 hours, have scheduled 4 hours set aside at a client site, but may have ended up being there 4.5 hours or 5 hours. And right from that individual calendar event, you'll have the ability to drive a timesheet, and then you can adjust the time to match what you really entered. And so, as you talk about lost hours, if I go back a week later and I looked at my calendar, I may not have recognized the fact that I actually scheduled 4 hours, but was there 5. And so those are the things you want to make sure you consider. And being able to sit there either via a mobile device or in your Outlook and being able to do it right there makes it so much easier, because then you have the best context and you have the best device to do it.
And it's integrated. It's simple. So the consultant and some of the integration that we talk about, many of our customers are using either Azure DevOps or Jira for their development and software personnel to take those hours and work with the client. Well, in some cases, they don't always talk to each other. So one of the integrations that we built initially was an Azure DevOps and Jira integration, so that even those developers and software folks who are doing their thing only have one time entry system. It flows all the way through both, or in this case, all 3 systems, Jira to the projects to the accounting system, and it's one piece of entry for the consultant/technician. So ease of entry makes that time entry very simple, very efficient. It's all integrated, and it lets you count every hour. And as we talk about those things and talk about utilization percentages, I think what we want to show next is how we make every hour count. So 2 of the things we talk about, real-time rates and real-time realized rates. Jeff, you're the accountant, so I'll ask the dumb questions, but I'm going to ask you, what is a realized rate and why does it matter to a ProServe business?
Well, I think it really does ultimately affect the bottom line. So we put together an example here, Rich, when you and I were talking about this, is you may have a consultant that, John Doe in this example, that is billed at $150 an hour. So at full capacity, if John Doe were a 40-hour per week employee, they would bill $6,000 at full utilization. Well, if
But that
we
means
say
they didn't breathe or do anything else during the week. They
that's
just were
exactly
billing.
right. So, but if we say that, hey, let's be more realistic about this, then, if we say our goal is 70% billable, then they bill 28 hours in a week. So in that case, they're going to drive $4,200 worth of revenue. And, but, if they bill those 22 hours, rather than the $6,000, they're billing $4,200. And then what that leads us to is, in reality, a realized rate of $105 an hour rather than $150 an hour, because they worked the whole 40 hours. They just didn't bill the whole 40 hours. And so this really is very important to be able to, not only at the time of looking at profitability, but also in planning. If you know that very typically your resources are going to bill 70%, then you're planning around that. You're planning around that level of profitability. So it's really important. But then the other thing that comes to that is not only how much are you billing, but how much does that resource cost you? Because if that employee worked the whole 40 hours, but only billed 28 of those hours, their cost is the same. So in this simple example, and it is a simple example, we define that, hey, let's say the resource, for easy math's sake, it costs us $75 an hour. So during that week, that resource costs us $3,000. Now, the other thing to consider on this, and we did this in a very simple math situation, the true cost of a resource could be more than that, if depending on whether we're picking just their salary or their hourly rate, or if we're building in loaded costs with their benefits as well. So all things to think about. But in regards to that, so rather than making $3,000 in profit, then we're only going to make $1,200 in profit based upon all of that. So it's just things that you have to think about in regards to, making sure that you're planning your staffing and you're as efficient as possible to drive as much billing and utilization as you possibly can. So hopefully this kind of ties it all together to show you how important all of this is and how it works together.
So I want to take it a step further, because we talked about 70% on the billable target. We talked about those 28 hours. One of the things that we really push is, how can we get 1% better? In the real world, I'm a triathlete and have been a triathlete for a long time, and the goal of any athlete for anything they're doing is to be 1% better than yesterday. It's just 1%. I can do it, I think. So that's the goal, is to always go up 1%. What happens, and let's look at what happens, if we get a utilization increase of, to make the math easy, since Jeff said, let's take a 1 hour increase of billability, and knowing that we can pick up 3 or 4 hours just by doing our timesheets on a daily basis. Look at what 1 hour can do to the profitability of a business. Jeff, since you ran through the last one, you want to run through this and show the difference?
Oh yeah, so absolutely. So in this example, what we've done is, all of the cost stays the same. And the billing rate stays the same. So this resource is still costing us $75 per hour. Their cost per week is $3,000. Our capacity is $6,000. But if we build 29 hours versus 28 hours, so 72.5% versus 70%, then we're going to end up driving $4,350 in revenue rather than what we did before. So 1 hour, and it took our profitability from $1,200 to $1,350. So we have an increase of $150 per employee. If we have let's say our company has 150 billable employees, then that's $22,500 per week, which would lead to $585,000 per year. Now, each week's going to vary, but just to give you some sense of how paying attention to making sure that you're disciplined in regards to time entry makes a world of difference for your organization.
And while we're not charging you for that 585, anybody that would like to put those suggestions into play and send those checks, feel free to do so. This is real money. I mean, this is this works. We've seen it work. We talk to people and show them how to make it work. By doing one thing that costs you nothing, you can increase your bottom line. And if, as Jeff said with that example, 150 employees by doing one extra billable hour a week. And that doesn't mean working an extra hour. That means capturing an extra hour. Capture an extra hour. In this case, it was per day, but either way, capture that extra hour per week, and you could end up with $500,000 extra on the bottom line, again, by doing nothing more than you were doing. Well, the next question from that is, if we are doing that, how do we know that we're doing that? So one of the other big 5 tips is you've got to invest in real-time data analytics that provide you not only profit and project profitability stuff, but also predictability and forecasting things. And in our world, real time is the key. I talk many times about some of the companies that we talk to where far too many of them, and it's a conversation that I've had 100 times, far too many of them, as we talk about how do you do things and how do you know your projects are profitable and how do you determine those kinds of things, the answer far too frequently is, we wait till all the expenses are in, we wait till all the hours are in, and then we run an analysis post-mortem on the project to see if we made money or not. No, that is not the way we need to do that. That's far too late to be able to figure out whether or not I'm profitable. We have to have an idea up front that we are in our target market, that we're with customers that we know, that we're the subject matter expert, that we know what our profit margins generally are in this type of project, and then can I track that kind of project data in real time across the system. Now, there are multiple ways to do that. There are, at last count, something like 73 different ways and different products that can help you track those kinds of things. One of the things, as we did our research and got into the product and the interconnectivity and ease of use and those kinds of things, is what Jeff is showing here, which is a simple Power BI dashboard. Jeff, you want to run through a little bit about what are the things we can find in that Power BI dashboard?
Well, there are a lot of different things that we can dig into when in regards to these types of dashboards. So first of all, you will be able to very easily isolate, productivity by resource. So being able to tell who's doing that extra percentage and who's not, and who's lagging behind and who's not, and then you can start to analyze why. So obviously, getting the results is one thing, analyzing your results is the second thing, and making sure that you take this data and do something about it. And so, but even as these can serve a variety of purposes, Rich. They can also really just give you an idea of how you're doing at the project level in regards to productivity, how you're performing against the project budget. Are you coming in under? Are you coming in over? Those types of things. Also, there are ways that you can take this type of data and understand what your backlog is so you can plan around it. So dashboarding and doing data analytics on your projects is vitally important for a variety of reasons.
And as we talk about that, the keys there, the data analytics, the predictability, the forecasting, the backlog, all of that come down to real time. If it's not in real time, it's too late. You're going to have inaccurate data. You may make inaccurate decisions, and the real time is important there. So one of the ways to make sure that you've got the right real time, or the right data in real time for the right people, is the right infrastructure. And we are very big proponents of the one source of truth. And as we think about the things that we integrate with, we're talking about the accounting system is Business Central. The CRM is for the customers, and that's in Business Central as well. And there's multiple options for that. The project accounting in Business Central with Progressus, the reporting in Business Central with Power BI. All of that can be on part of a dashboard in each individual user's role center. So again, it's one source of truth. We even mentioned those integrations where we can pull the Azure DevOps information, the Jira information. Even though the system has expense reporting built in as part of the system, maybe you're using one of the other third-party expense systems. I don't need to mention any of them because there are 100 of those as well. But what maybe you're using that, or you're using a payroll system, or whatever you're tying on for whatever your specific vertical need is, you need to make sure that it integrates directly into the infrastructure and you're not having multiple silos of information. One of the ones that I talk about frequently, and it just happened again, although it still didn't hit the top number. We ran into a company who were helping. They had 18 different systems. Every division, department, personnel, project had a different way to track their information. And then when it rolled up to the accounting team and the project management team and the CEO C-level team, they had no idea what information was accurate and what wasn't, because there wasn't one source of truth. It came from 18 different silos, and each silo had its own criteria. My record so far that I've run into is 25 different systems. I really don't want to do that again, although we make a big difference when we can go into a company like that and say, hey, let's make this right. So I said we were going to try to be as respectful of your time as possible. That runs us right to the bottom of the hour. We've got a lot more to go through. Maybe we'll make this a point two for our next webinar. However, thank you all so much for being with us. I hope you enjoyed and were able to gain a little bit of insight on resource and resource management and resource allocation and how that matters to utilization. I certainly hope so. If you have any questions, if you'd like to get in touch with us or any of our team, the information is there, insider@velosio.com, along with the phone number. Mr. Smith, thank you so very much for your expertise. Couldn't have done it without you.
Thank you, and thanks to everyone on the line.
Have a great day. Thanks all.